Okay, let's see the return of income of charitable or religious trust or institution. These are filed under section 139, subsection 4A. This is also something similar to the return of income of a political party that we saw in the previous video, but let me just cover it. Where total income of a charitable or a religious trust from property held under charitable or religious purposes. Now what happens is that, there are these trusts and charitable institutes. Let's say, for example, most of the schools in India are run under trust. And there are section 11 and 12 which provide exemption to the institutes or the charitable trusts or institutions who are formed for the purpose of welfare of the poor and all those charitable and religious purposes as are defined under that section. So now, where the total income of such charitable or religious trust, again, what do you mean by total income? Again, total income concept is the same that I had discussed with you. Let me just take you back through. So where the total income of charitable or religious trust. So let's say again the total income is 500 and before exemption under section 11 and 12. Let's say the exemption that they get is 500 and their taxable income is 0. However, where this income, the total income before this exemption exceeds the maximum amount not chargeable to tax, then the trust or institution is under an obligation to file the return of income within the time allowed under section 139 subsection 1. So if suppose in your case, you are earning say 5 lakh rupees a year. A trust is earning 5 lakh rupees a year. And it's also getting an exemption under section 11 or 12 as the case may be. There's a defined procedure that this trust has to follow under those sections. And the income after exemption under those sections is more than, the exemption, before the exemption, the income is more than the amount which is chargeable for such trusts or institutions, then the trust is under an obligation to file return of income within the time allowed under section 139(1). Certain other points. Tax rates applicable to them are that of individual. Due date for ROI 30th September. Section 12A limits the exemption under section 11 and 2 only when the accounts are audited, when total income exceeds rupees 1.5 lakh. What does this mean? This basically means that the requirement to get your accounts audited is essential to claim the exemption under 11 and 12. So if your accounts are not audited, even though you would have filed this return of income, you will not get the exemption. Now, under section 272A, penalty of rupees 1000 per day for every day during which the failure continues for timely filing of ROI under section 139 subsection 4A. So what does this mean? This means that if you don't file your return of income by the due date, for every day for which this default continues, there could be a penalty of rupees 1000 per day. Now, but does this continues indefinitely? If you don't file your return for 10 years, is it that you have to pay 1000 rupees per day for all these 10 years? No. If the ROI is not filed at all, then penalty under section 272A shall be levied up to the date of completion of best judgment assessment. So what will happen is, the day when the assessing officer completes the best judgment assessment, then till that date only 1000 per day penalty can be imposed. Now if you don't file your return of income, normal assessment cannot happen, and even best judgment assessment can happen up to a particular time limit. So therefore there is a limit to this penalty. And the last point is return furnished under section 139(4)(a), which is the return of income of the charitable or religious institution, is deemed to be return furnished under section 139(1). and can therefore be revised under section 139(5). So as long as you file this return within the due date, you have the right to revise it as well.